Hey everybody, welcome back. Well, to start with, we should talk about Dell. I do want to go through the indexes because I'm seeing some things I don't like, but Dell's up pretty substantially, I would say. You're up about $15, $16, and the conference is over. I waited for the conferences to be over before filming this because there's some things that we need to talk about. Now, you'll notice a couple changes for those that have been with us for some time. We're going to start doing the black background, and I'm going to just put the watermark right here. I will clean this up when I have the time to do it, but I'm also going to leave in these indicators up here so that you can see it, and then also this stuff over here, because I get asked a lot of questions, what are you clicking on? So if I put it in the screen, you should be able to follow along. So any comments on this, let me know. But the ability to go dark mode, everybody wanted it, so we're going to do it. And we'll start doing these in dark mode. So you can see right in here, and you can see this little bit of a flag sitting right there, right? So we have this flag, so it's really hard to say, well, geez, we're just going to roll over. And I'm not suggesting that we're just going to roll over. What I don't like is when we're just grinding like this. So what I mean by that is all we're doing right now is just this straight up like this, right? And if I was able to clone this, which I cannot on here, but you can see that, right? And I have this saying where rising wedges end in tears. They're just a matter of time before there's a really bad day. We just don't know what it is. What you would prefer is consolidation and then breakout, consolidation and then breakout. That's not what you're getting here, where you have some level of consolidation like you do right here. You can see that. And then you break out and then you consolidate. That's not what we have going on here. So that makes this pretty weak. Okay? And it makes it easier for just us to get into a position where we have a bad day. Now, obviously, I'm not predicting that. But I think there's some weakness out there. We went through, the other day, we went through smart money, dumb money, and the different levels there and how they're coinciding with one another. My issue is that what we're seeing rally is more of the frothy names, and then there's no follow through. We will get to that. Now, that doesn't mean that we don't have pockets and that these pockets aren't doing well, but we are watching the legs get pulled out much, much faster, much faster. So I'm going to clean all this off for a second. And then again, you can just see how you're sitting right up here. Now, a couple things about today that I think are interesting. People are just going to say, oh, we're at the high. You're at the high and you're forming this here, let's look at it on an hourly and I'll show you what I mean by this. You're forming this really interesting wedge on the hourly. And I'm a little concerned by it, but let me show you it. And then you can kind of go from there. And again, you can comment what you're thinking. I'm not trying to be an alarmist because you're talking to someone that's pretty long the market, but see this channel right in here? And it's not perfect by any stretch. Bonk, right? Couldn't get near flips, rallies, and now you stop right there. So it's there and it's an issue. And I am watching it. Now, if I go here and everyone knows these private clouds and I use them every once in a while, if I look at these private clouds and then I come here, and this is just something that I use, it's really hard for me to bet against this. Why? Because I flipped today and I have gone, what? Green from yellow. So that's also something else that I have to take into account. So here's what I don't want to do. And this is where it gets kind of iffy. You don't want to be the guy that's crying, wolf when there is no wolf. I'm making sure that my sayings are correct this evening because we have a lot to go through. What I want to point out to you is this. I think that we're getting a little frothy when you start to look at some of this stuff. And I think that watching the legs get pulled out of a couple things today should have been an awakening. Now, for me, the Bitcoin names, the way that they're leading, and then we're watching names like AMD just go up or CELH, and we'll get into those names. And after hours, we've got some big movers, but they're starting to recognize the value of some of these names. Like Dell's a name that we've been trading for some time. We'll get into that. I also do want to show my February P&L. Someone said, could you just show your February P&L on just the day trading account? I'm going to show it real quick. Saturday, I'm going to get into it because today's not in there. And I have a big hedge on against VKTX. And I want to show that hedge because I'm probably going to be down on the day because of the hedge. And then it'll bleed out. But I'll walk you through that for Saturday. I'll save it for Saturday and you'll be able to see that. But the purpose of this is, okay, so this is where we're at. We saw PCE. We saw how they responded to PCE, which was in line, right? Even though they're not going to go out there and raise rates, and we know that. We know that they're not going to go out there, and we know that they're not going to raise rates. We know that they're not going to cut rates. So what do we have? We have a stock market, and where does that leave us? And I'm not going to draw the stool. Well, I guess I am going to draw the stool. I'm not going to go get the actual stool itself, but we have these legs, right? So you have the macro, you have the fundamental, and you have the technical. I say I'm not going to do it, and then I do it. But this is important. And for the longest time, will he, won't he cut rates? Will he, won't he raise rates? Right? It was like a soap opera. Every hour, one of these guys was coming out and saying something different about the market. I've never seen anything like it. It was like the Marx Brothers, if you ever saw them. And so now we're in a position where it's all fundamentally driven. And I'd much rather have that. It's so much easier to trade. So what do we have going on? Well, we have earnings that are driving the market, and they're continuing to drive the market. And that's really what you want. But the problem that I'm having is that we're not seeing the rising tide, right? A rising tide should lift all boats. We're not getting that, right? We're getting these just really weird reactions. And I'm going to say something, and then you're going to want to remember this statement. When you see massive volatility, like massive volatility, you are setting yourself up for some kind of reversal. Not necessarily in that name, but there is no reason that something like this should be up like this in a day. There's no reason for CELH to be up $20. Now, everyone's going to come out and tell me it's the best drink ever, and have you had one? I'm just telling you, there's no reason for this kind of move on those kinds of earnings, unless something miraculous happened where the company's getting bought, right? Now you look at this after hours and you look at it today, and this is what you see. And this is big stuff because you jump up and you see this gap. We call these are rising windows. The greater the rising window, the greater the move, okay? Whenever you have a gap in the chart like this, I don't know if they'll give it to me here or not. Let me see if they will. If they do, for those that use TradingView, there's a functionality here. Let me see if I can find it really quickly because it'd be good for you guys to learn how to do this. Let me see if they populate them. Yeah, they'll populate them. You're going to give me the rising window you are. So I'm not going to get rid of all of them here, but let me show you this so you can say it. See this RW? When you see these, you want to pay attention. Also these Marbuza whites. But you see this rising window is a 2-candle bullish continuation. Come on. That forms during an uptrend. Both candles in the pattern can be used of any type with the exception of 4-price doji. The most important characteristic is the price gap between the first and the high. So this is important. The most important characteristic of the pattern is a price gap between the first candle high and the second candle low. That gap between the two bars signifies support against the selling pressure. So what this is telling you, and we're going to just take that off for a moment, is that you gapped up when this happened. That's telling you everything you need to know. It doesn't matter you come back and you backfill. Of course you're going to do that. The algos are going to do that, right? But that's telling you everything you need to know. This happened to me a falling window the other day. I'm going to cover that on Saturday on a trade that even though I thought it might go higher, I got out of anyway and took a loss. But I want to walk through that, but not tonight. We'll do that one on Saturday if we have time. I want to stay focused tonight on what I see going so that you understand going into the weekend. The one thing that we're also seeing going into the weekend, which has been bothersome, is if you go back and you take a look at the ES, and you just start looking at these dates where you go Friday, okay? Well, Friday we kind of held our own, right? Now go take a look at the NASDAQ on Friday. And I do look at stuff like this, and I think it's very important. Okay, you're down on Friday. And then you just start going through them and just looking and go, well, how about the Friday before that? We were down. 1, 2, 3, right? Just find it again. Okay, well, that one we were up. And you start going through them, and you just want to look. What you don't want, I'll tell you what you don't want. There's a pattern. When you start getting to 3 or 4 Fridays in a row that are down, that means that they are selling. Institutions are selling, and you just don't know it yet because they're looking at their allocations on the week. So you want to see what we do tomorrow. You do not want a red day tomorrow. Okay? Now, could we have a red day? We could. There's some really good earnings out there tonight, and we're going to talk about that and see how they go. There's also some really bad earnings, but I think that the earnings from Dell could propel us a little bit higher, and obviously there's a lot of fervor with AMD. I'm concerned about the frothiness of the market, and that's really what I wanted to focus on tonight so that you guys have a plan for tomorrow. I think it's really important that when I look at the comments in the video that people kind of get a sense of where they are right now, candidly. So if we take a look at the market as a whole, and we just start, I'm going to drop this in, and we're going to make this and what we're looking at right now is stocks above the 20-day. Okay, so this is all the stocks in the S&P that are above the 20-day. And you can see where you're at right now. You're at that 71. So you're not too low and you're not too high. You're right smack in the middle. If you look at stocks above the 50-day on the S&P 500, very similar. You're not too low. You're not too high. You're just in the middle. And then, pardon me, and then we'll look at the 5-day where you smack dab in the middle. So when you start to look at this, you're not really seeing anything that is giving you that indication that we're way overbought or not, right? But what you're not seeing is you're not seeing the follow through in the names. So while these names are mid-level and we don't really see anything there that's telling us that we have a problem, when we start going through them, let's get rid of this for a second, we're not seeing leadership. And you'd say, well, what do you mean? Well, leadership is the NASDAQ leading. We don't have the NASDAQ really following through and leading, right? We've really haven't had that since about January 24th. You want the NASDAQ to lead. What this is the NASDAQ divided by the SPY. If the SPY's leading, this is what you get, just so we're clear on this. Okay, so when the SPY starts to lead, this is what it looks like. Anybody remember what trading the market looked like during that period in time? Okay, I'm not suggesting you're going through this. I'm suggesting you might go through something like this. You might go through something that we just saw in July, because we are setting up for some of that. Now we're going to spend more time on this, but remember when this happened in July? But that was Japan, and then we went down for a couple months. So if you start zooming into this and you take it apart and you go, okay, well, let's just zoom out of this completely to the 24th. And then you can see the change right here, right? So once you see that change, the S&P is actually outperforming. And there's another way to kind of look at this too. What you can do is just go S&P, and then you would go here and you would add. And I find these comparisons very helpful to explain what's going on to people. So what you do is we just put the S&P, and then we put the NASDAQ, and we put the Russell in. And the purpose of tonight's video is just to understand what's going on, right? That's the purpose, so that you have an actual plan. So that when we look at, let's say, February 1st, and we start going, okay, let's go to February and go, what's going on? Well, if you look at this, IWM right now is outperforming the NASDAQ, right? Now, if I move this over a little bit, it might be a little bit different. But when you start to see this, this is not really what you're looking for. Now, if I drop this to, let's just say, a 5-minute, and then we go to let's go to the 14th for a second. And we start looking at the 14th, which would be the last 2 weeks. Well, now we start to see something even more different, don't we? Right? So what you're doing is you're taking a time lapse. You're starting in January, okay? And then you're looking at mid-January, the first 2 weeks, right? And then you're looking at, which would include the beginning of January. Now we're looking at the last 2, right? You see how we're doing a time lapse? Okay, hopefully you see that. So now what are we saying? Well, the NASDAQ's the worst for the past 2 weeks. Okay, well, let's just go and let's just say, let's go to the 21st, right? And take a look there and see if that's getting any better. And then you could say, yep, things are falling in line. Okay, we're getting a little better. So is this something that we need to be concerned about, or is it something that we need to be concerned about? And quite frankly, we don't have an answer yet, but it's definitely on my radar, and it's definitely something that I'm concerned about. If I can watch the SPY and the Q, and I look at this, let me get rid of all this other stuff and make this a bear chart. If I can look at the SPY and the Q, and I start seeing this, right, where we're starting to rally and the SPY is leading, I want this to reverse. I want the NASDAQ to lead. I do not want the S&P to lead. I wouldn't mind if the Russell leads, but if the Russell leads, you're getting into a stock picker's market, which might not be the worst idea in the world, but you need to watch this. So when people say to me, okay, what do we do with what you just showed us? This is what you do with it. You want to watch the NASDAQ at the end of the day, and you want to make sure that the NASDAQ in and of itself, okay, is outperforming the S&P. That's what you want to do with this. That's the easiest thing for you to do with this. Is the NASDAQ outperforming the S&P? Because we do have some signs here, and again, we'll spend more time on this, but I just want everybody to watch this specifically. Let's drop this here. I want everybody to watch this tomorrow so that they can kind of just get a sense of what's going on out there. Because if we start looking, I'm going to leave all these moving averages in, because it's not like you're breaking technically yet, right? You're really not. The only thing that's bothering me more than anything is these moves are somewhat frothy. And I don't mind trading them, but you have to understand that you're trading them. And then you're watching other sectors break down, which we're going to get to in a second, which I did not like at all. So you can see the negative divergence here. You can see how this is coming up here. All right, when was the last time that happened? Okay, well, you can see this here, and we can see this right here. All right, so that would be, again, in July, right, that we could see this. Okay, so at the end of the day, they're the two periods that we've seen before, and we've seen what's transpired when that happens, right? Just as you could see the positive divergence here, where you have the RSI setting up at the same levels, and then it's going to do this, right? And it doesn't matter the time frame. You could see this and do this on a weekly, and then you could just drop this here, and I'll show you this. And then you just watch this and go back, and you can actually see some of the bigger moves, right? And how you were able to determine the bottom. See the positive divergence right here on the weekly. That's why I always, when people say these divergences don't work, you try not to laugh. But like everything else, you actually have to know how to use them. So when you start to see this kind of stuff, right, they do mark levels, and they are worth paying attention to. All right, so now you know what you're supposed to be looking for to some extent. Are you overbought by looking at where we are with as many names are over on the S&P? No. You're not, right? So it's not like we're at a 95 on stocks above their 50-day moving average, right? Which would be this S5 FI that anyone can look at on TradingView. Okay, so we're not seeing that, right? Let's drop this to a bear. And this is why I love not editing the videos. I can pack so much more stuff in. So, all right, so now we understand where we are, right? And we know that we're not up here, which is usually a telltale sign. So we know what we have to look for. We know we're not there. Are we just going to see rotation? That's a great question. And the question for me and the answer for me is, I don't know, but we're not really seeing it. I'm going to explain this. So something like XBI to me today is troubling. And you're going to say why? And I'm going to say, I'm glad you asked. But you see how you just completely fell out of bed and closed at the low? So today I'm looking at this chart and I was asked in the community, do you think that we should look at LABD? And my response was, no, I don't want to look at LABD. Why would I look at this chart and buy this? Right now, today's the day of all the days of the year. That was probably not the worst idea to buy that. I'm in this, and we've been in this for some time, and we've done exceptionally well with this trade. That's not ideal, okay? This is not ideal. Now, this also is not ideal, and this is what I want to wait for on Saturday to walk through with everybody, but this also is not ideal. If I go take a look at VKTX, for example, when I look at VKTX, I have all these levels marked off. And what I did with this was build a position, trade around it, and I have options, puts against all my stock. I have a ton of stock and I have puts against it. So no matter what happens, I'm locked in at 80 in all my stock. Nevertheless, the stock's down because of the secondary, blah, blah, blah. You guys all know this. What happened today with the secondary, 85. There are two things that happened today that I think are very troubling. Number one, they oversized this. They went from 350 to 500 on it, 550, right? So they had more demand. What happened to the demand? Okay, at 85. Well, as soon as they got the stock, what did they do? They either put it in weak hands or they changed their mind. But something happened today where these people realized, the institutions realized, they don't want to own biotech. It wasn't just VKTX that dropped. It was all of biotech, right? There was a bunch of these that did it. So something is triggering them from getting out. So where's the leadership, right? And that's what we're going to start talking about here in a moment. But you see this break right here? Whenever you have a huge move like this, a huge move on earnings or anything else, do yourself a huge favor. If you take nothing else from this video, leave an anchored VWAP there. Like literally never move it and just watch how it responds to it. Because the moment that this broke was the moment we were at 85. When we broke 85, we knew we had a problem. Because if you break the bid of 85, which was where the secondary does, that means the institutional sponsorship, they're not going to support that. And the people that wanted the stock are now able to get as much as they want, and now they don't want it. So all your buyers dried up. And that means that selling will ensue. It's one of the easiest shorts out there. But you broke this, that was it. So once we did this, it was really easy for me to put the 80s on. We paid 2 for them. And at one point they were 6. I was more interested in letting it drop and then buying stock against it. I've been asked to do a video on this and how it works. I'm going to do one this weekend so that you can just watch this weekend's video, and I'll show you exactly what I did and how I do it. But I think this is a really important concept and people could benefit from it. Okay, so this broke, right? So that becomes an issue. And then the next issue that I see besides this is where really is the leadership? So then you have KRE and everybody's getting excited. And I'm just going to show you the day. So we're all excited because they're not going to cut rates, they're not going to raise rates, they're going to stay status quo. So we're all going to buy regionals. Okay, that lasted about a half hour. All right. So when you start going through this and going, well, where did we have follow through today? Well, here's basic materials. Did you have any follow through? Well, not really. The first 10 minutes, right? You start going through. Well, XLC, we must have had some follow through there. No, that made it about 15, 20 minutes and we fell out of bed. So when you start looking at the last, the top 11 sectors, I'm not going to bore everyone with all the 40 and going through them, but when you start going through these sectors and you start looking at the day and going, what was up? What was up after the first five minutes, right? And you just take them. I mean, it doesn't take long for you to do this. Oh, they went to safety. Did they? Did they go into safety names? Because in the last 10 minutes, they couldn't get out fast enough. So where did they go? Well, Goldman had a nice piece today on REITs, so maybe they went in REITs, last 5 minutes, okay? Your entire trade was within 5 minutes. Well, they probably went to utilities. Now they dumped utilities at the end of the day. Oh, well, then it's healthcare, okay? Do you see where I'm going with this? So there's not really what we're looking for here. XLY, maybe, but here's the first 5 minutes again. So you could make the argument that they went into retail. Okay, that could be an argument. You could say they went into mining after the first 5 or 10 minutes. It's a stretch, okay? Out of all the sectors, this is what we got. If you're going into exploration of energy, that is not a sign that's healthy for the market as a whole, right? Because that means that prices are going higher. So why are they going into this? And that leads us to things like this. And we start looking at Gush, which is a 2X ETF. All right. So I'm trying to get you guys to think. Hopefully you're getting that with this video, right? So you start looking at all the sectors, you start looking at the movements, you start seeing the froth in some of these moves, and then you start seeing this. Right now, overlay this with the simplest of moving averages, right? And let's get this down for a moment. And let's just pop the 200 in as well. Okay, so if we flip the 200-day moving average here, which means we're also going to flip it here if we haven't already. Usually this moves ahead, it has. So now we're in a position where exploration companies are being bought. That's not real bullish for the market. If you want to go back and take a look, when was the last time that this had the single greatest move, right? If you really go back and take a look at when was the time to buy XOP, it was in 22. And look at the move. So are we setting up for something like that again? I don't have an answer, right? So if you're looking for me to just spoon feed you, wrong video. What I'm trying to do is I'm trying to get you to think, because I don't know what's going on. I can tell you this, that the way that the market's acting, it's acting frothy. So we do have some earnings I want to go through, and you guys are welcome to comment, but please, you cannot tell me that this is normal behavior, right? Or it's normal behavior for MicroStrategies, and I love MicroStrategies, don't get me wrong, but it's not normal behavior for the underlying asset to go down and the stock to go up when all the other names are going up, right? It's not normal. All the other names are collapsing. Okay, we had a nice short on this today. I thought it might rally because they were buying those names. It didn't, so we reversed it and actually did really well with that. But you can see the gap here, right? So like that would be what? A falling window. Remember how we just showed you a rising window? Hopefully you're following this. So when we start to look at this, right, we can start seeing a very different picture, right? So why would one name go up and the others go down? It's only one reason, because they have short sellers. Those short sellers are covering. You start looking at CVNA and you start looking at these breakouts. And then what happens? Well, we get consolidation. Well, where's the follow through? Right? We are not having follow through. Well, Net had excellent earnings. Where's the follow through? Okay, we're not getting that follow through. TTD, great earnings, no follow through. Right? So this becomes concerning. But are we going to pin our hopes on AMD? Because they're doing more. Now I'm saying this as somebody that's actually, let me be real clear about this. I'm giving you a perspective. That doesn't mean that I'm not long AMD. I am right now, okay? But it doesn't mean that. What I'm trying to do is, again, how long do you think I'm going to be in AMD tomorrow, right? If it starts to falter, not very long. So we need to start looking at this and start really understanding what's going on. And I think that's really important. Now, focus on OKTA, which had a blowout quarter and then went sideways. And now we've got the mother of all long-legged dojis sitting right there, like the daddy long leg of all dojis, right? Okay, so that didn't have follow through. Okay, well, Dual had follow through right after it opened, right? No, the open, and that was it. Okay, so both of these names crushed, no follow through. Well, Snow rallied, sure, because it's down 40% or what, 18%. So sure, it rallied, right? Okay, it only rallied back to the first 5 or 10 minutes of the day, right? The one that you see the most buying on was CRM. So you're seeing them buy the generals, and I actually traded this, and I think this was actually a good quarter, misunderstood. So you do have some pockets, but you take a look at tonight, and you start seeing, well, what's going on tonight? Okay, Autodesk was actually really good, and it's trading up. All right, so this would be one that we'd want to watch tomorrow for sure, so we could get a sense of the market and see what's going on there, right? We want to see how that's going to go. Zscaler, okay, and we can see right now, after hours, I thought it was a decent quarter. They didn't like the guidance. Stock's down about $20. Crowd was down with it and now is trying to bounce. Let's take a look at that after hours so that you can see what's going on there. I'm going to drop that to an extended chart, and you can see that it was actually down about $10 at one point, and now it's trying to fight its way back, right? Because it got a little frothy there to the downside. All right, so we have some good, we have some bad, and so we're going to want to watch those tomorrow. Dell, okay. Dell after hours, in my opinion, Dell crushed. Okay, this was a good quarter. It's not that, it's the gross margins on the revenue. And it's because they're selling higher ticket products that are making higher gross margins. Yeah, I think one of the most misunderstood things to me is, and I didn't get this at first, until it was explained to me. I didn't understand how IBM or how any of these service companies fit into AI. But when people start getting it, I do think that you could see multiple expansion. You're going to want to watch this. This is one that I'm currently long, but you're going to want to watch this, and you're going to want to see how this plays out tomorrow. This is your focal point to see how the new leaders that came out Thursday night and how they did. We'll go through more of this this week. I'm just going to do a snapshot of it now. I'll do it more on Saturday. This is January. Again, this is one account. This is a day trading account. It's done aggressively with the Alpha Chasers community. So this is not how I traded everything. I just wanted to show February because I got a bunch of comments to show it. We're up $1.27 and we're at 2.5 to 1. We're at a 54.63% trade ratio now. I think I had a couple down days here. And again, I will put out the trade execution time and sale so you can see everything. This is going to be down. 29 is going to be down because of my hedge. But I will get into this in greater detail on Saturday, specifically this hedge, because I keep getting asked more and more about it. But people wanted to say, hey, where did you close for the month? Fairly well. But what I would say to you is, if you look at the month, I think it's important to understand something. You can actually start seeing when it gets harder and harder. So there were times where it was very easy to make money in the beginning, right? and then you could start seeing it turn. Not so much this, because there were some great, some great trades that we were able to take advantage of in here. See if we can look at something like real quick, like NVIDIA calls and Square. There was like a bunch of stuff that was really fun to trade. More NVIDIA, more NVIDIA. So there was a bunch of stuff like that was like really fun to trade. This is probably more NVIDIA, right? So, but now you're just getting into that tough penny environment. So even this week we'll probably be net on the week, but even this week was a little difficult. Specifically because of VKTX. But I will get more into this this weekend. If there's something specific about this that you want to see, just let me know and we'll go from there. That is it.